Alright, what is up, guys? Welcome to this episode of WuBlockchain podcast. I'm your host, Shang, and today we're pleased to have Guy, who is the founder and CEO of a very hot project recently, Ethena Lab. Welcome to the podcast, Guy. How are you doing?
I'm doing great. Thanks for having me on.
Awesome. So for those of the audience who are familiar with Ethena protocol, can you just give a quick, brief overview of the TLDR of Ethena protocol and why should the industry and crypto degens pay attention to this?
Yeah, sure. So the idea behind Ethena actually came from a blog post that Arthur put out at the beginning of 2023. It was called Dust on Crust. He outlined his vision for a synthetic crypto native dollar where you essentially take Bitcoin and then short the perpetual with that collateral. And those two things come together and net off to create what is a synthetic dollar. So this is something that actually traders had been doing on BitMEX and other venues for years before stablecoins even existed. And this is how they use derivatives within crypto to actually avoid touching fiat rails. So yeah, I read his piece and he had a bit of a call to try and find a team to come and actually build the idea. I was pretty inspired by his vision, and I quit my job in Tradfi to start building out what we're doing with Ethena. We had a couple of changes to make to Arthur's core idea. So we thought it made sense to start with staked ETH and ETH instead of Bitcoin. That doesn't mean that we won't eventually get to Bitcoin and Sol, but that's one thing that we just want to start with because you've got like a yield now to being long staked ETH. And then the interesting thing about those two pieces coming together is that when you have staked ETH and then a short ETH position, they really bring together like the only two forms of scalable crypto native yield into a single instrument. So I think people generally underestimate the size of the centralized exchange derivative market and how much yield is actually produced there. So even just over the last 3 months, I'm sure you've seen people speaking about these crazy funding rates where it's costing you, 30, 40, 50, 60% to be long Bitcoin or ETH as people are so bullish. And essentially the main source of yield that comes into Athena's synthetic dollar is taking the other side of that bullishness and essentially shorting on the other side. And so, we've created something that looks pretty interesting, we think, because it's removed our reliance on the traditional banking system for stablecoins, and it allows us to have our own stablecoin or synthetic dollar. And it's using just purely crypto native assets, crypto native entities, and we think is pretty interesting for users who don't feel like they want to be touching stuff within the real world when it comes to stablecoins. But then I think the thing that has interested people the most is that the yield obviously looks pretty attractive because it's the first time that you're really able to capture that yield within centralized exchanges, tokenize it, and then start putting it into different areas of DeFi in really interesting ways. So that's the overview on our side.
Yeah, speaking of Arthur, I actually worked at BitMEX for a year and a half. So I definitely remember, reading his blog and about the idea of, shorting perp, long spot to create a stablecoin. That's a fascinating story because like how you decided to quit your job and just feel that vision. Can you share like what that process is like? Like how did you find Arthur?
Yeah, I got put in contact with the head of investments at his family office. And it wasn't anything more crazy than me just sending a message saying like exactly what I just told you. Like I was inspired by the idea. This is how we're thinking of actually implementing it, and what we wanted to sort of change with this idea. And I had a couple of calls with Arthur, and I think he was just sort of sizing us up and checking if he thought that we were like actually the right team to do it. And then he was on board and sort of supportive of us from the beginning, and has been super helpful when it comes to getting like the centralized exchanges, I think, all on board, because I think one thing that looks quite different about us is we have all of the centralized exchanges in crypto as investors and supporters. So you don't often see Binance, OKX, Bybit, Deribit all come together to support one thing. And it was quite helpful to have him, who I think that they all respect because of his background in having created a PAP. I think they all have immense respect for him, and he sort of helped bring them all together.
Yeah, that's amazing. Yeah, so you call yourself a synthetic dollar. That's kind of different from what people like used to talk like stablecoin, right? Why is that? And does it kind of relate to, I don't know, like regulatory issue, or is it more of a marketing strategy?
Yeah, it's actually us. I think after last cycle where we saw some deceptive marketing from some teams, and I think founders who didn't clearly sort of explain the risks of the products that they were delivering to users. And I think after some of the learnings we had from last cycle, we thought it was important to actually just let users know that actually the financial risks that sit around a cash and carry like Ethena look very different to the risks for like a normal stablecoin. So normal stablecoins obviously do have risk, and we did learn that with SVB going down. You know, we saw USDC trading down to 90 cents. All of these things have risks, and anyone who pretends that they don't is just being dishonest. We just wanted to make the naming slightly different so that people understood, and we wanted to encourage people to actually just learn about how this looks very different. And so that was really just part of it, where we just want to be open and transparent with users that it looks very different in its construction.
It makes sense because kind of the word stablecoin has some bad memories created from last cycle. So I also think the synthetic dollar idea is quite novel. And speaking of that, you mentioned how Arthur got you guys set up with, tackling all the challenges. What are the biggest moats that Athena has? Like if someone else were to come into the same idea and try to fork it or do something similar, what do you think? What do you think are the most for Athena?
I think it actually looks very different to, I guess, normal different DeFi projects, which have all of the code open source on chain. So all of the stuff that sits on chain is open source, and people can go and diligence that code. But it's very small actually compared to the infrastructure that sits off chain for us. So just to give you a rough sense, the stuff that's on chain and actually on Ethereum is roughly 600 lines of code in the mint and redeem contract. That's compared to like 50,000 lines of code which sit off chain for all of the hedging infrastructure and systems of that. And so people can fork and try and copy it on chain, but like actually the complexity sits in a place that's not open source. I think the second piece around this is people don't really understand that like centralized exchanges won't allow multiple entities like Athena to actually do this, because if something goes wrong with Athena, it actually presents like a risk to their business if you get too big. And so the centralized exchanges, have to actually allow you to get this big on their venues, and you can't really have multiple of these like running around the market doing the same thing. So I think the biggest moat is actually around the centralized exchanges, where they need to be okay with you doing this at size, and they're obviously all investors in what we do. So we have some level of confidence that if they are equity owners and they are owners within the project, they don't want to sort of support competing projects trying to do the same thing. So that's probably the biggest moat, I think, around Athena.
It makes sense. What's your end game? Like, do you see Athena USDe competing with Tether one day, or do you think it's kind of like sitting in the niche of just arbitraging as a high yield product? Where do you see Athena probably in the next 3 years or even longer?
Yeah, I think it's difficult to get to the size of Tether just because it's like ultimately constrained by the derivative market within crypto. So that can obviously grow, and it's grown like very quickly through different cycles. But like your ability to basically infinitely scale Tether with T-bills means that it's always going to be challenging to get to that kind of size. That doesn't mean that we can't be big. So I think even where the market is right now, Athena could be north of $10 billion and still exist like safely. So the way I view it is that like stablecoins are basically the most important financial instrument within crypto. It dominates all the trading volumes. It's like probably the most useful product that we've actually come up with. But we don't have like our own crypto native version, right? Like we rely on banking systems that we're trying to undermine and overthrow, and we're still like wholly reliant on them with their own with stablecoins. And so we sort of see ourselves as neutral infrastructure, which we hope would become one of the most important pieces of infrastructure, both within DeFi and CeFi, where we can actually rely on a scalable dollar that's useful within our own system and can be a bit of a hedge to our reliance on centralized stablecoins. So that's really the vision, which is we want to just provide people an alternative across both CeFi and DeFi. And I think if you can do that at scale, you become potentially one of the most important pieces of infrastructure in the space.
Yeah, as a DeFi farmer myself, right? USD has been quite an important piece of our strategy, right? My strategy, because
Yeah.
back then when this bear market, you also have you just have this base yield of like SDI, which offers like 5%, and you can sort of use that as a benchmark. But then when Athena came out, the yield become north of like 30%, even 60% nowadays. And you can create this arbitrage opportunity to borrow DAI or any other stablecoin anywhere below like 20%, 10%, and just purchase USDe. But the
Yeah.
question I have is the yield will decrease, right? With the large of the short part position, as well as there are more farmers out there arbitraging this opportunity away from this gap. Um, what is the next step of USDE, I guess? Because the last thing we want to see is the shards program that ends, or the kind of the yield kind of normalizes to, I guess, like low teens. You kind of have this like unwinding pressure coming. Like people will maybe farm a new Athena protocol. I don't know. But what do you think will keep the users staying Athena? Could it be, I don't know, like as you said, a trading pair on centralized exchanges? We have to, if you can share some of those thoughts.
Yeah, I think it's really getting usefulness of the product into people's hands. So I think one thing people forget about stablecoins is you need to find a real reason for people to demand them, right? It's not just about providing the infra on the supply side. And so I think with the connections that we have with centralized exchanges, I think one of the biggest opportunities is actually try to become money on the exchanges where you're using USDE not only for trading pairs, but then also for collateral to long perps, because it's actually incredibly interesting to start using USDE to then margin your BTC and ETH perps, because it starts to pay for some of the funding on the other side. So I think that that's a huge use case that sort of drives demand, even if the yield is much lower. I think the other point to just mention here is that if the yields come down, that's totally fine. Like this is a market set interest rate. And I think one of the biggest mistakes with Anchor was like you fix this interest rate at a level which makes like no sense, because you don't allow market forces to actually adjust to get the right supply of the stablecoin itself. And so for us, like if the rates come down, it means that we're too big and we need to shrink. And when we shrink, it allows you to lift the shorts and then allows like funding to come back again. So yeah, we're going to go through phases of like growing and shrinking and growing and shrinking, and like that's totally fine. We want this to be a market set product, and so yeah, we're happy with that sort of being the outcome there. When we can never sort of control those rates, all we do is provide the infra to allow the mechanism to expand and contract as required.
Yeah, there are always cycles in crypto, and with the current yield of USDE, it seems very justifiable. And let's like dive into a bit more into risk management. What do you think are the biggest risks behind USDE?
Yeah, I think it's people focusing on the funding one quite a bit. It's not that actually that's not really a concern to me. I think when the funding goes low or like even potentially negative, it's self-correcting. So people will step out and then like it will allow the product to bounce again. I think the piece that actually is a little bit more on the top of my mind is more around liquidity, which is there's a cost to come in and out of USDE where you need to execute the hedges, and then on the way out you need to unwind the hedges. And if you're doing that at a huge size and forcing people in and out, that's going to be there's going to be some slippage with that. So we pass on all of the slippage to users. We can never like internalize that cost into Athena, but you could have situations where everyone's trying to get out, and instead of it costing you like 5 or 10 basis points, it costs you like 50 or 100 basis points to get out. The key piece here is that it's not like a systemic issue to the actual solvency of the asset itself. It's like it's just a cost of liquidity which we can't hide anywhere. It has to basically just exist and be pushed onto the users. And so I really see like the ugly scenarios are when everyone's trying to get out and there's just a high cost of slippage to do so. And when that's happening, you just need to make sure that you have liquidity and the ability to actually service redemptions without users taking like much of a haircut. But I would also just mention here, you've always got to think about these things on a risk adjusted basis. So if you're earning 30, 40, 50, 60% yield, and let's say you have 50 basis points of slippage on the way out, it's actually better than like holding USDC for nothing
Yeah,
and
it's still
then
worth
like
it.
having slippage. Yeah, exactly. It has to be like contextualized versus the return that you've actually generated. So I'll just encourage people to think about it like that as well, which is it's not just like USDT versus Athena. It's actually what is the yield that you've generated and how does that look like at the end of things rather than just looking at the slippage piece in isolation.
Yeah. There is the introduction of insurance fund. What is the function of insurance fund in, I guess, the risk mitigation part?
Yeah, it's really there just for this negative funding scenario. So if you see the data and know that like generally it's extremely positive the funding and you get paid to put on the shorts, but you know that sometimes there's going to be periods where there's very short periods of negative funding. You just want to like take some from the good times and leave it there for the bad times, and it's really just there so that people don't feel the need that they need to jump in and out like crazy the whole time when the yields are dropping. You've just got something that's there for a rainy day. If funding ever goes below zero, you can help to pay with some of that with the insurance fund.
And so it's a way to smooth out, I guess, the rate that USD offers. When there's a negative funding rate, you kind of use the reserve you have for insurance fund and still keep it positive. Is that ideal?
Yeah, just keep it at zero basically. So we don't want to be paying out of it and paying 5-10%. It's just like so that people aren't like losing while they're waiting for funding to come back.
Yeah, yes, that totally makes sense. Right. So here's something getting a little bit more interesting for the audience. Can you dive deep into what the shards program? I know it's been around for quite some time. Yeah, people are tired of points. But yeah, can you tell us more about the shards program and how it works and what it is really?
Yeah. Yeah, we were just trying to encourage people to take USD and use it in different pieces of the ecosystem, and so like encourage people to put it in AMMs for like swapping within Curve. We wanted to get people to use it on money markets, whether that's like an Aave or a Morpho, those type of things. Exploring like different leverage protocols like Gearbox, or even like the yield trading that you see on Pendle. So really for us, it was just a way that we're trying to encourage people to actually take the dollar and use it in interesting places through DeFi and start to like kickstart some of the partnerships and like integrations through DeFi, which we think has been a cool way to just get people like actually using the product rather than just like holding it and capturing the yield. So yeah, the shard program, we're not going to be adding any new like huge programs to it now. It's basically just going to be running until April the 1st, and then I think we're going to have some like news around that week about what happens later after that. So yeah,
Stay tuned. There's still 15 days of shards farming. Yeah, for if there's a potential token, what is going to be the use case of it?
yeah, you can think about it like all of these discussions we're having around the insurance fund now. Like, what is the risk that you actually want? Like, where do you want to take some of the yield that's being generated? Is it to the insurance fund? Is it to somewhere else? Is it to maybe give it to a distribution partner who you can actually help like push it? Like a bunch of these different questions where we can be thinking about where does like the value actually sort of flow within the system. And then I think it's also just going to be helping define like what new products and like risk parameters do you want to put in there. So do you want to put in Solana into Athena? Do you want to put in Bitcoin? Do you want to do interesting things with Eigenlayer and LRTs and that kind of stuff? We want like people who are involved in the system to actually be there and choosing like directionally where does the product go, because there's a bunch of different interesting ways you can actually take this where ETH is just a starting point, and that you can do cool and interesting things with other assets as well.
What do you think about potentially leveraging more towards like Eigenlayer or other tokens? Do you think the risks are kind of justifiable, or you don't have a clear opinion yet? Because like the market,
Yeah, I think
as you said, is a cap, right? There's a cap of how much you can do with just sorting purpose.
yeah, exactly. I think right now, ironically, is probably the safest time for Eigenlayer because it's not even like live. You're just like putting ETH in the contract and it's not actually underwriting any ABS risk. And so you're getting like high returns because people have like a strong belief in Eigenlayer, but you're not actually taking on that much risk when it comes to underwriting ABSs. And so I think now is potentially one of the safer times for Eigenlayer, but I don't really want to include Eigenlayer within the core design of USDe. I think we should keep it outside as separate product. So maybe set up like vaults and like yield strategies in different vaults, but maybe keep it like separate at the moment to the core like USDe. But yeah, I think we don't really know enough about ABSs and different types of risks that are going to be there because it's not live yet, right? And we haven't seen it sort of play out. So my intention is more to keep some of this experimentation outside of like the core USD asset itself, and you can do interesting things with like side pockets of like bolts and that kind of stuff instead of having it like directly there in the collateral backing.
Do you think there's going to be any regulatory pressure that you foresee in the future? I know Arthur mentioned, how Tether is getting so big and it's becoming too big to fall for the Fed, or if they're trying to stop it. Um, what do you think about Athena in the case of, you growing to become, north of 10 billion in market cap? Um, do you think, maybe like the relationship with centralized changes, or people kind of use USD to do some shady stuff? Um, right? We see Tether corporates with, DOJ on some of those. What do you think about the regulatory pressure potential in the future?
Yeah, I think from our perspective, we're making sure that we don't touch any US users on the app or even like coming to interact with the staking contract. So we do run TRM checks there, and we have the ability as a team to actually blacklist addresses which have been flagged to us within the staking contract itself. So that is one piece which I just want to flag there because obviously we want to be able to respond if regulators are needing us to do anything. So I think ultimately, though, just taking a step back, because when you're operating on like on new and interesting ideas which are on the forefront of like innovation, there isn't always like a rule book for what you need to do. And so I think our approach has been like try and understand the rules as they exist today and put a framework around that we think makes sense. And then after that, make sure that you're maximally flexible to be able to respond if people require you to do something else. So there's a lot of like flexibility set up in the way that Athena sort of operates now, where if there's a fundamental change that needs to be made, we can respond to that type of stuff going forward. But yeah, I think ultimately it's going to be an interesting spot because clearly stablecoins, or like normal fiat stablecoins at least, have been like top of mind, I think, for regulators, especially within the US in terms of how they see that interacting with different things like CBDCs or what we actually call a stablecoin, what are the assets that can be in there. And so I think it's going to be a very interesting development that we'll see over the next 12 to 24 months.
Yeah, makes sense. What are the most exciting and roadmaps or execution plans that is kind of in your head that you want to share with us regarding Athena?
Yeah, I think thinking of adding BTC and Sol is super interesting. And bringing actually USD over to Solana, I'm pretty bullish on that ecosystem in general, and I think that we can do some interesting stuff there with the applications. I think actually plugging ourselves into DeFi money markets is very interesting because if you can start to lever up SUSD on money markets, it becomes incredibly interesting on like a post leverage return basis. If you can borrow from DeFi at 15 and put it in Athena at more than 60, that like creates like really interesting like returns. And then the distribution with the sexes that I mentioned, where you can use this as collateral to long a perp, I think that is such a huge opportunity that we need to get right. And I think people are going to be pretty excited about that when you can do it correctly.
Because when you do that, the users get benefit because they can, top of their leverage position, they're also earning a very good yield. Is that kind of the incentive behind like why people would adapt it?
Yeah, exactly. Like you can like cover some of your funding costs with your collateral, which I think is pretty huge.
Yeah, it seems like a win-win. Do you think like Athena's roles, you kind of in the next spot between like CeFi and DeFi?
Yeah.
Do you think it's going to be any interaction with the traditional financial system? in the future, or there already been any interest from the traditional finance side?
Yeah, I've actually been surprised by how interested they are already. So we had Franklin Templeton and Fidelity, who are investors into Athena as well. And I think what's interesting here is if you can package up a dollar instrument to actually export out of crypto into TradFi, where you've just put together a dollar which is safe and secure with a yield. It's actually pretty compelling to people within TradFi to just look at that and have like one-click access to be able to get in there. So that's actually something I've been quite surprised with, which is like how early and how interested they are in this type of product. Because I think, as you know, TradFi guys are actually quite like crypto, where they're obsessed with yield, and if you can produce a good yield on dollars, it's actually a pretty big
Yeah.
deal for them. So yeah, that is something that we're definitely pushing ahead. And I think once you exhaust a lot of the channels within crypto, it's actually a huge growth avenue afterwards. Yeah.
Yeah. What was it like dealing with the TradFi guys? Do they have a different risk parameter? I think, of course. What is it like? Is any interesting, I guess, takeaways from dealing with them?
Yeah, I think I've just been surprised at how open-minded they are to engage. I think with crypto, and like I guess that was my background, so I can sort of share perspectives on how I used to see things and how they're like looking at the space now, and I think that we can sort of speak the same language there. And yeah, I'm just sort of blown away with how keen and interested they are at actually learning like new and innovative stuff. It's not just like throwing BTC and ETH in a ETF. They actually want to get onto the forefront of innovation and understand things. So yeah, I'm super pleased with like their engagement with the space. And I was a bit worried when the ETFs were coming out that was kind of all they were going to be doing, and they were just here to sort of clip a fee and not really engage with the space. But that's absolutely not the case from my experience, having dealt with them.
That's awesome to hear. Because we always hear this like kind of boomers and TradFi guys just like this like Bitcoin drip talk, but you're at the forefront of like showing novel ideas and introducing to them. So it's awesome. It's awesome to hear that.
Yeah, yeah.
Yeah. So I guess for those who are interested in Athena, where do you suggest them to look into, or how do people find you?
Yeah, so we're on Athena_labs on Twitter. You can find our website at www.athena.fi. And then I've got a slightly strange Twitter handle, which hopefully we can share in the show notes. It's called Leptocardic. And yeah, we're there, can answer any questions in Discord. And would obviously love, once you've sort of reviewed the risk documentation and think you understand the product, would obviously love to have you on board if there's any interest in coming to Athena.
Awesome. Do you have any final message, I guess, or suggestions through your building journey to our viewers?
Yeah, I don't know if I'm the right person to give advice on any of these things, but I think the only advice I have is that I thought about doing something like this in 2020 and 21, and I just never had like the initiative to actually get up and actually go and do it. And all I can say is like if you're listening and you have like the ambition to go and do something crazy and interesting and ambitious, just go and do it. The world like sort of rewards you for actually getting up and trying to execute something. So yeah, if you're listening to this and you're on the fence, my only advice is like go get up and go grab it.
Let's let you go. All right. Thank you so much for coming on, guys. Appreciate you,
Yeah,
and hope all the best for Athena protocol. And hopefully we can do a second episode when this new roadmap's coming out.
yeah, for sure. Let's do it anytime. Thanks,
All right,
man.
awesome. Yeah. Before we kind of yeah, sorry. That's the end of the episode. Yeah. All right. Thank you so much. Yeah. So actually, we do a lot of Arthur articles translation in Chinese
Yeah,
before like it's kind of like I think since he started it, because I have a good friend with Colin, and I used to work at BitMEX, and like Arthur just seemed like such a visionary guy with like such bold ideas. So it's actually very very nice to know that you guys are actually build it. I think one of his I think I think if it wasn't for like he got like all the regulatory troubles at Bitmax, I heard from my boss like maybe it's something that would have been something on Bitmax, but yeah, it's actually it's great to have the opportunity to speak to you because yeah, I feel like things are connected back to where I first joined the industry, so it's awesome.
Yeah, pretty crazy to see it go from like a blog post to to something real. So yeah,
amazing. Yeah, it would actually be nice to have Arthur on our podcast if there's any opportunities, maybe together. Maybe set a milestone.
Yeah, I can definitely ask him. I'll ping his main guy and get a response.
Awesome. Maybe you can add him on the Telegram chat. That'd be awesome. That'd be a huge favor. But yeah, he just really just been loving his stuff.
Cool. We'll get it done.
All right, thank you, guy.
All right, man. Appreciate it. Thanks for having me on.
Yeah, thank you.
Cheers.
Cheers.